Coming up in this show, I'm going to bring you my opening comments on the markets. Arby's got trade ideas for you. He's going to look at XOP, which is positive, showing you our multiple time frame analysis. And then I'll bring you a look at the stock market. We're going to look at SPY and the VIX, FEZ, and HYG. And we're going to look at the Market Conditions Monitor, which is a great app that we offer. And don't miss our workshop special. This is the 5 essential building blocks to successful trading. This is absolutely fantastic, broad workshop that just will help you improve your success.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week. And a look forward to what might happen in coming weeks. And hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market gave a little ground last week, but very reluctantly, with buyers stepping in on every selling wave. That made for a week with a lot of intraday chop, and it was certainly frustrating for those looking for a correction, though buyers were not greatly rewarded either. Even on Friday, which had a big morning uptick on the payroll numbers, which were much stronger than expected. Also, the unemployment rate ticked down, and the wage numbers were quite strong. All of those would normally be considered bad news. However, bulls are really looking for reasons to buy, and maybe signs of no recession is a good reason. In the meantime, the bond market didn't like the news and ticked down on that. Powell, in his interview this week, he talked about a go-slow approach with the direction, just as he has said often in the past, not determined. In other words, he wants to just allow data to tell him where to go, and so now he's not saying that he has got any idea as to what speed the rate cuts are coming, though he does believe more are coming. In the meantime, the market had priced in a lot of rate cuts, and interest rates ticked up a bit. It's pretty much in line with our analysis. China's stimulus sent their market up a huge 25%. That did not offer great support for U.S. stocks, as China pretty much has been moving very much on its own, collapsing over the last year and then having this big, maybe short covering rally. The Mideast war got much hotter, as Iran shot 182 ballistic missiles at Israel, basically did not do much in the way of harm other than a few getting through. And this is Iran's response to Israel going after Hezbollah and, of course, Hamas. Now the world prepares for Israel's response. The safety bids came into the market on this as the dollar got strong, but gold really still remained very firm. That would be unusual, as the dollar moves up. Usually gold moves down, but in this case that did not happen, and it just kind of enhances the idea that there's a safety bid in the dollar going on, or in the world, as who knows how this is going to end up in the Middle East. And oil was jumping on that, and the fear of losing about 4% of world supplies if Israel goes in and takes out their oil in Iran, which is certainly a possibility. That New York port strike also had an effect on oil prices, but now that's been settled, or at least looking like so. They have 90 days to confirm that. That's a 62% raise in the salaries for the port workers over the next 6 years. That sure sounds inflationary to me. The stock market did spend the last 2 weeks in a range, only modest weakness creeping in early this week. And based on our work, which I'll show you in a few minutes, Then the next 2 weeks could continue with this choppy sideways action. It's the last 2 weeks of October and the early part of November that I think have the biggest downside risk. And we've warned enough for now about the valuations in the stock market. But I strongly believe that those high valuations put a cap on the upside in these indexes. But at the same time, downside risk is sizable. So just ahead, I believe we'll see a high volatility environment. And the VIX may already be warning us of that. I'll show you that later also. Here we are at midday, and the indexes for the week are fractionally lower, and that's despite putting on this giant rally early in the day here on Friday, where the S&Ps were up over 50 points on the employment run, on the payroll numbers, which certainly was a surprise to me. Bonds, they take a hit on the week. A 30's down 2 3/4 points. The 10-year yields up about 20 basis points on the week. That brings them up to about 3.95. Our upside target when they were trading at about 3.56 was to rally, that we'd see a bump in yields to 3.88 to 4.06. And you can see we are in that range right now. So that analysis was spot on. Gold loses about $10 on the week, while silver picks up just a few pennies, and that's despite the strong dollar, as we said. And the dollar gains 2% on the week. That's the biggest week for the dollar in 6 months, as it was getting sold very hard down to the 100 level and now bounces into the 102s. Oil gains about $5.50 on the week. Now, this is the biggest week for oil in 2 years. And then certainly all of that, the gain in the dollar and the gain in oil, is about the Mideast war and the fears that it's going to become a bigger war. Go to askSlim.com, and then you will be able to see all of the great stuff that we have there. You want to get acquainted with us? Go into our free stuff on the top of the website and sign up for the free Snapshot Lite. You'll get Matt's fantastic work. That's analysis on the S&P 500 every single day. You get that emailed to you. No credit card, no problem. YouTube, subscribe to the channel, click the notification bell. You'll know when we put up videos, and do like this video. Give it a thumbs up. On X, follow us at askSlim. And if you have any questions on what we give you here, please do write to Matt at askSlim.com. This is Trade Ideas. Arvi does a phenomenal job on this. He's going to share bullish multiple time frame analysis in XOP. And you're going to be able to see the confirmation of that positive condition using our market condition monitor. Arvi, show that to them.
This is an askSlim trade idea video walkthrough for an intermediate term setup that we are looking at here in the XOP, which is the S&P Oil and Gas ETF. Now, back on 9/23, we did a video in stock sectors for askSlim level 2, 3, and 4 members, highlighting specifically this opportunity in the oil and gas patch. And we are now seeing a turn back up in price, which is confirming the cycle analysis. So let's see where we are now in the XOP. We have a trough that was due here, 8.5 to 10.7. We turned down sharply, formed a hammer, had a test of that low that held, and we are now seeing some buying here this week. Overall, there are good odds of a move back towards that 61.8 fib at around 147.54. If it moves through that, there's a 78.6 fib at 154. If we shift over to the daily chart, now I did that video, as I said, back on 9/23, so that was right here. Now, what happened? One day later, we got that sell. Now, as we got that sell, and then I saw us hold right here, I made an observation in our Trade Ideas feed on Discord saying that the XOP has saved itself from a breakdown. That is a really important observation to make here, because you can see that it held above that 78.6 fib. If we were to have lost that 78.6 fib on a closing basis, that would have been a negative short-term situation and raise the odds that you're looking at a move like that. Because we held above that level and saved ourselves there, we then put a long out in OXY right here on this day, and Oxy is so far paying nicely, as is obviously the XOP having a sharp turn back up. So where are we now? That is what everyone wants to know, of course. Well, we are still in a rising phase. There's a 78.6 here at 138.40. This old swing high here is at 142.33. Good odds of a test of that level. And based on where we are in the intermediate term cycle structure, we would be looking for this to form a bullish right hand translation and to see again a high form on the right side of that idealized cycle, and for a small pullback, that is what forms a right hand translation, after which we will look for still higher. So obviously we are still positive here on the XOP, and I wanted to share an update with you guys so that way you are aware of what we saw at the time, what has saved the pattern, and again where we are right now. If we go ahead and shift over to our askSlim market conditions monitor, I wanted to share with you what's going on in terms of our indicators. So this is our askSlim market conditions monitor. Again, it has over 140 symbols here on this list, and it shows you some of the evidence trade setup condition as per our indicators, and you can actually filter by time frames. So let's say you are an intermediate term trader, you can scroll down and see all of the conditions amongst the 140 of the most liquid underlyings. So it's super helpful. What I want to highlight here is the XOP. So let's go ahead and hop over to the short-term condition, and you can see that the XOP, as of yesterday, right near the close, changed the short-term bias now to bullish here after being neutral. That is really very important because it is confirming, if we hop now back to the charts, it is confirming this move on the upside. So again, you can use the MCM to give you that confirmation of shifts in condition. It is super helpful because it's literally like having thousands of eyes watching all of these symbols and watching for changes in conditions. And if you are a level 4 member, you can actually be notified of changes. So all of that is there to make your trade planning and trading more efficient, right? That is why we have built the MCM. I say all of that just to really give you what is the sum of the evidence here. The sum of the evidence is obviously positive now on the short term as well as the intermediate term, and there are still likely higher highs coming here in this sector ETF. If you have any questions, feel free to post them in the comment section on YouTube. And I do hope you guys enjoyed this segment. And as always, feel free to reach out with any questions. Thanks again, and have a good day.
Stock market analysis and projections on the S&P 500. Here's a little of important information for you. Read this slide first before you proceed. This tells you about our approach to the markets and how it's important for you to take ownership of your own trades as you use our analysis or ideas you get from anybody. The 5 essential building blocks to successful trading. A special price on this amazing workshop. Is this what trading feels like to you? Do you feel off balance, always trying to find that elusive, perfect mix of charts, indicators, and other trading tools? And of course, the parts of you that may be fighting all that internally, this is the workshop for you. Information, write to Matt at askSlim.com or go to the top of the website. What you're going to see in there is a kind of a broader look at what I'm showing you right now. This fantastic workshop I produced, 6 videos. It's not your everyday how-to trader workshop. It's not that guaranteed winning system. It's about you. It's about all the parts of you and all the parts of trading, all brought to you, I think, in a great way. And it takes you through a lot of my history, tells you a lot of my story, and how I give you some processes that really help you to be a better trader. Of course, a better person. Building block 1 is about defining a healthy role for trading in your life. So often we give trading the wrong role, and that gives us problems. It helps you build emotional fitness and control your reactions, which I think is so important to success. Tells you about matching your style with a method and personality. All of those things put together so you don't end up looking like this when you're trying to trade. And adopting 6 areas of discipline. Discipline may be the most misunderstood and overused word because it's not just about taking losses. There are so many more aspects of discipline about getting you prepared to be a trader and to design your own unique plan and winning formula. We look at that in building block number 5. This is an amazing workshop. I spent a long time looking at this, and there's a lot of reveal about my history in there, and you're going to find it fantastic. This 6-video online workshop guides you through a process of self-discovery, my process of self-discovery, and the one that you can use to improve your trading. It's an opportunity to identify what holds you back from achieving your greatest success and craft your own unique formula, your winning formula. Sign up for this powerful workshop at a great reduced price. Not only is it about trading psychology, but about so many of those other things that are important to you, about putting it all together. Really 2 special prices here and a great offer. For non-members or free members, you get $100 off. That's only $197. And we're going to include with that a free month of level 3, which is $119 value. So if you want a great exposure to what we do in as far as our analysis and what we offer with our applications, not only will you get the workshop for $197, but you'll get a month of level 3. For our premium levels members, levels 1 to 4, you're going to get 50% off. That's only $148.50. Now, the level 3 and 4, you already see lots of those great things. But if you're a level 1 or 2 member, we're going to boost you up to level 3 for a month. So you're going to get a free month of level 3. So premium members 1 to 4, 50% off. You're going to only pay $148.50. And you're going to, if you're level 1 and 2, we're going to move you up to level 3 for a month. This is an unreal deal, and you're going to be blown away by the quality of this workshop. Absolutely fantastic. If you're watching this right now and you have never been an askSlim member, this is such a great way, if you're interested in the markets, to really improve your success. All right, stock market, S&P 500. We're going to look at the SPY cycle analysis and projections. We're going to use our level 4 indicators looking at SPY. Now, I've talked about the fact that I thought that from somewhere in September through November, the window would open for a sizable correction in the stock market. Now, we've gotten through September without anything happening in that window, and now early October, we've seen a sideways chop going on for a couple of weeks in the stock market. And now we're going to take a look at why this very unique style of analysis that we have is saying that there's reason for concern and there are risks ahead, which could start any time, though I think it's really going to be in a couple of weeks that the risk really picks up, and that there could be a sizable downside move ahead in the market. Geopolitical issues aside, whatever that is, we're looking mostly at the technical aspects of the market, but it's pretty hard to ignore what's going on in the world right now. Let's take a look first as we look at SPY. So this is a multiple time frame grid. We're looking at weekly, daily. We have daily momentum separated out for you to see clearly, and then we have 2-hour charts here. I'm going to go from left to right, and I will blow this chart up on the weekly and show you the analysis. Now, many of you are very familiar with our analysis because we have really many thousands of people that look at our analysis every single week. And for those of you that are brand new, what we have here on the bottom are cycle brackets. I get a lot of people that write to me and they say, what's that indicator on the bottom? Well, this is not an indicator. This is a drawing tool. And we just simply use this to help find us the average cyclical period. And if you want to learn more about our analysis, go up to the workshop tab. and take a look at the information on the cycle analysis workshop. And you're going to see there tons of information, and you'll learn a lot by watching the free video in there. So what we're looking at here, again, the bottom is the cycle brackets. I'll show you that right over here. So, it's like if I go to this exact low and I go to this exact low, it opens them up and you can see, and we kind of look for where they align the best in order to get the sense for the money flows, how money is moving in and out of the market. And when you see a market that is moving as this one is, and you see these cycles making higher peaks and higher bottoms, you can see the uptrend in there as it essentially has existed in this bull market back from that low way back over here in 2022. So you have that uptrend in there, and if you look at each of these cycles in here, you can see a positive cycle. In other words, it finished well above where it started. And that's a positive configuration and positive translation. In other words, the peak translated way on the right side of this big cycle. The same thing happened over here, positive translation, and even more positive configuration because it was a very strong upward move. Each of these yellow areas, are the corrective periods. In other words, when money flows out and when there's this big upward force going on. And you can see it here in our reversal scout right there, where it turns up. It pretty much confirms the cycle trough right in there, and it stayed positive through here. It turns up right in here. It confirms this trough, and now it has been in a wiggle here. This wiggle, this downside move, was that yen panic right there, but then it moved right back up and turned positive again. And we still have positive momentum here on the weekly chart, looking at this reversal scout. This is a level 4 proprietary indicator, by the way. So we have conditions that are positive. However, you can see that we're coming to this period where the corrections are normal. Pullbacks are normal. This one right here, after a very bullish cycle, fell about 6%. This fell about 11% right over there, and that gives you an idea of the potential for downside moves that exist right in this yellow area right there. Supports, well, the highest support level we see is about 543. That's not very far down. That would be about a 5% move, much more likely to get you to the monthly support here at 525, with a pretty good potential of getting 509 or lower in this period here, which takes you out to mid-November. Mid to late November actually is a possibility. Remember, the election is November 5th, and I have a feeling that that election is going to bring fireworks. Anyway, here we are. These last couple of weeks really, going nowhere. These are called spinning tops in the candlestick theory world, which essentially tells you that there's pressure on both sides, buying and selling. Like in the beginning of the show, I talked about, I think there's a cap in the market based on valuations at 200% of GDP, and that may be why the market is stalling. So again, what we're looking for is a decline. Most likely, I think the highest probability is to about 525. That's 43 points in the SPY, and that still is not a very big percentage loss. It's somewhere between the 6 and 11% decline that's in there. It could be worse, and it could be better, but that declining phase is likely to show up. Let's take a look at the daily. Now remember, if we're looking for a decline in here, we would be projecting on the daily for a similar declining period. In other words, the drop in here to somewhere around mid to late November. So here, when we look at the daily cycles, you can see each of these vertical timing lines there show you where the actual trough was in the cycle, and you can see the beauty in understanding these rhythms. Positive cycle here said you'd go to a new high. We got the reversal scout and the slim ribbon turning positive, and on the bottom, the option bias study. Now, what this tells you is how to bias your option positions giving you the highest probability that you will be in the right direction. When it is here at the P3 level, right there, that's a solid 3, that's when it's the highest probability that there's an alignment of all time frames, giving you strength in the market. You can see we're still under those conditions right now. Here we see the last 2 weeks it's been moving in a range. I'll just tighten this up a little bit for you to see right here. And with the momentum still strong in here, well, we would expect with only about a week or so to go in this cycle, maybe it's 3 to 6 days, that a decline would come, but again, it would hit supports and then begin to move up again. Now you can see in here the projection is that it won't, once the low is made, once we get a correction, that the rally will not get to a new high. It's kind of a bold call for me. It's because of me believing in this weekly correction that is very due. There's also a coinciding monthly correction that's due. So under those conditions, I would expect that it would be a decline in here that would come from this period, mid to late October into this period right over here, which is mid-November. So this is the riskiest period out over here. That, on the beginning of the week, at the beginning of the show, I talked about continued choppy conditions. This is why I think they come down in here and then come back up. This rally, of course, could get you to be could get up here and test these levels here rather than stopping over here, making some kind of a double top. I wouldn't have an argument with that. I think that could happen. But we're looking for further decline right over here, an attempted rally here into the mid-October area time frame, and then this bigger downside move. And I'm going to show you other reasons that I believe that that's coming. In the meantime, momentum positive in here. I'm going to move over to the daily chart, momentum chart, and you can see it's still positive. This is an area chart on the Slim Ribbon. Slim Ribbon is a free indicator. And it's available on several different platforms. And if you need information on that, you can write to team@askSlim.com. This I'm showing, of course, on the Thinkorswim platform, which is the platform that we primarily use. Now, on the bottom is the Slim Ribbon PO. And what that tells you is when the momentum conditions are positive and ready to resume. When it's green, it's positive. These arrows say momentum is resuming on the upside. You can see the value of that as all of these were positive. When this one went negative here, this arrow told you about this decline. That was perfect. And now you can see positive readings in here and right in here. And that still tells you that there is strength in the market. So that's agreeing with what I'm saying about the market coming down, coming back up. And until this turns red, we would not have a reason to believe that there is a sizable decline going on in the SPY. So I'm showing you things that are anticipating weakness, but in the meantime, showing strength. We've had that condition for quite a while, as we have talked about the potential for a correction, but always being agnostic and following what our algorithms tell us are the most important things about market condition. Here is the 2 hour. Now, this is the SPY. Now, you can see in here that when the 2 hour alignment is as it was right in here, where it was positive from here all the way through here, that's for if you're a trader that trades intraday or very, very short term, near term as we call it, that's when you want to bias your positions also to the long side, or have your biggest trades to the long side. Once it turns red, you start to get some warnings that things are changing in here, and you can see that. This is the Slim Ribbon PO on the 2 hour, and you could see phenomenally good messages there, and now turning red. On the bottom here is the market condition indicator. This has got the longest components built into it. And you can see it gets up here near 100, and it's trading right now in the 70s. These are bullish readings still. So you have a very bullish condition still existing with a little idea that there is some weakening going on in the market. And that very much aligns with, on the daily chart, what I'm looking for as this corrective period right in here, over this next week or so before we then get, I think, is the final bounce. Now, what I want to do is I want to bring in some other charts that I think are important to this analysis. This, of course, is the SPY looking at all of those charts. Now, let's look at the VIX. I'm going to bring the VIX in here for you to see. And if I'm talking about the stock market going into a corrective period, I would be looking for the VIX to make a bottom. We have been talking about this bottom forming in here around mid-October for weeks and weeks and weeks. And that the potential was that, VIX might chop around in here, and you could see it's doing it here on the daily. I said maybe rally into mid-October. Well, that's right over here. This is about the third week of October where this trough then does set. There's a potential that this low is already in place and will get tested on the weekly. But basically, the VIX is telling you that market participants are beginning to look for insurance in the market. I don't blame them. At 200% of GDP, Middle East tensions going on, there is just so much that can cause the stock market to move down. And again, I think that upside is extremely limited compared to the downside that is available in the market. This is the VIX bottoming in a bottoming process here. I could easily see into November the VIX getting up into the high 30s to all the way up into the 50s during that period between, let's say, week 2 of October and week 2 of November. So that 3 to 4 week window in there is where I think there could be a huge spike in implied volatilities, just as we're showing right over here. There's an out of phase cycle right over here that might have bottomed already. And if that's the case, it may prevent VIX from getting down very far over here. But this is a picture of the cycle analysis in the VIX, which has just been absolutely phenomenal in helping us as a guide for analysis in the market. Indications in the VIX that within about a week, week and a half time, then there's a high probability of a big spike in implied volatilities, and that being a time when the stock market is likely moving down. So let's move in the HYG. This, I think, is an important chart in comparison to look at right now. So this is your high yield bonds. This is the stock market I'm making a stock market comparison. So I've got that line in there, which is the stock market, the S&P 500. And you can see that there is a strong correlation in the cyclical patterns in here in the stock market and in the high yields. Now, the high yields are giving you a very bullish look right in here, a lot like the stock market, but now look like they're turning down. Where does this low come? Right over here if there's a decline in high yields? Down into this mid-November period. So the stock market, which is likely turning down and could give a sizable correction right now, that aligns with the HYG. And you could see the beautiful tracking here when you look at HYG versus this highlighted S&P 500 line that I have right there. So strong correlations between these high yields and the S&P 500, and calling for a move to the downside of some consequence in the next, let's say, 3 to 5 weeks in here. That correlates with what we believe is happening in the S&P 500. And then after that, another rally out over here, which very much correlates with what we see in the stock market. So I'll move that away there. I'm just going to pull up the weekly right over here on the S&P 500. And yes, so if I were to be projecting further out, I would say that after a decline in here, just like in the HYG, there would be another rally out here of some significance out into 2025. So I just want to show you all of those correlations. Now what I want to do is bring in FEZ. And this is the European Euro Stoxx 50. And look at these cycles in here, which so correlate with the S&P 500. And again, this one looks like it made its peak already and is turned down with this downside bar. You can see the megaphone pattern as it's forming in here. It's a common topping pattern, and very often the first move down gets you somewhere into the middle, and that would take you down over here somewhere around 50, or down over here 48.5 in this period, yes, out into mid to late November. So you see all of these correlations that we have going on right now in the S&P 500 with the VIX, the FEZ, HYG, all of them pointing to the potential that the stock market is going to have a pretty sizable corrective period right now as we're looking at this out into November. That is a look at at all of the indexes. Let's take a quick look at our market condition monitor, and we're looking at the short term right over here in the market condition monitor. This is an application for our level 3 and level 4 members. So on the short term, look at these indexes. They have all turned neutral. Now, they were all positive and now turning neutral for the short term. If I look at the near term, which is the intraday trading, would be like those 2-hour charts, you can see in here, again, they're all neutral. So it's not giving you anything. I've almost never shown it this way because the market is just in this sideways chop, those spinning tops on the daily chart, just like I said. But if you look at the intermediate, they're all very bullish. So what that tells you is that this period that we see of correction coming is pretty likely to be temporary. And like I'm only looking for 3 or 4 weeks to the downside, but hard. And then the market moving up again after that. So that gives us that idea. If you want to know on the short term which are the best and the worst of the stocks, we'll look at trade setup conditions, and we'll look at the ones in here that are very bullish right there. And you can see right there, PPLT, KIE, emerging markets. Of course, that's affected by China. Morgan Stanley, PayPal, eBay. Those are all stocks that are very bullish. And we'll keep it going. KLAC, TSM, gold, that's GLD, the semiconductor index, LUV, SLV, silver, of course, CRM, TMUS. These are all on the short term very bullish. So which are the ones that are very bearish? We'll look at the setup condition here, and you can see Federal Express, Boeing, Coin. Look at that. Coin is bearish. But the only two that are very bearish are Boeing and FDX. These are all bearish looking right there, including Costco, which, of course, was a monster stock and now really looks like it's beginning to have trouble. And so are a lot of those stocks in retail. So that's a look at our market condition monitor. It's a fantastic application. And again, you get this with level 3 and level 4. The difference is level 4 gets the intraday information, but level 3 does not. So sign up for level 3 or 4 and you will see this. And if you're brand new and you are going to take the workshop for this special that we're offering in the workshop, you're going to get level 3 for 1 month, and you're going to get that application. So don't forget, sign up for the 5 essential building blocks to successful trading at these amazing reduced prices. Go to the top of the askSlim website, and you'll see right there where it says BB Building Block Special, little square up there, and you'll be able to sign up for that. And if you have any questions, write to Matt at askSlim.com. That's it for this show. Go to askSlim.com and explore. Sign up for our free snapshot. Go into the free stuff, and you'll get S&P analysis every single day. And on YouTube, subscribe to the channel, click the notification bell, and like this video. Give it a thumbs up. And on X, follow us at askSlim. Any questions, write to Matt at askSlim.com. I want you to be so careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm